Let's look into perils and hazards. A peril is a specific event that causes a loss. Example: fire, windstorm, theft, or even death. These are considered as perils. With these perils, the chance of occurring a loss is highly likely. Now, coming to hazard. A hazard is a condition that increases the likelihood or chance or severity of a loss. Example: slippery floors in a supermarket. So, slippery floors in a supermarket might create a chance for someone and to slip and break a bone in their body. This is called as physical hazard. Smoking, which is called as moral hazard, or reckless driving, which is called as moral hazard. So, peril is a specific event that causes a loss. Hazard is a condition that increases the chance of a loss. When it comes to property and casualty insurance, such as home and auto insurance policies, in these policies, perils are typically listed under the insuring agreement or um, under a section called covered perils section of the policy. Named peril policies specify only covered risks, while open peril policies, which is otherwise called as all risk policies, cover all perils except those excluded. Exclusions and limitations are usually found in the exclusions section of the policy. Now, when it comes to life insurance policies, these policies generally do not list specific perils. Instead, they cover death from any cause unless explicitly excluded. Exclusions such as suicide within the contestability period, war, or hazardous activities are found in the exclusions section of the policy. Thirdly, when it comes to health insurance policies, health insurance does not usually list perils but instead defines covered medical conditions and treatments under the covered sections or benefits sections of the policy. Exclusions for specific illnesses or treatments are found in the exclusions and limitations section of the policy. Keep in mind that insurance policies can cover named perils which are specifically listed in the policy, or all risks, or open perils which cover anything specifically excluded. Now, in property and casualty insurance, hazards are usually defined in the policy's definitions section. Insurers classify hazards into three main types. First, we have physical hazards. These are tangible conditions that increase chances of risk. For instance, faulty wiring increases the risk of fire. Icy sidewalks increase the likelihood of slip and fall accidents. A leaky roof leads to water damage. Overloaded electrical circuits increases to electrical fire risk, and bald tires on a car increases the chance of accidents. Next, we have moral hazards. These involve dishonest actions by the insured that increase risks. Examples include inflating claims, staging accidents, arson for profit, fake theft reports, and misrepresentation or lying on insurance applications. Finally, there are moral hazards. These are careless behaviors because the insured knows that they are covered. This could be neglecting property maintenance, reckless driving, leaving doors unlocked, not shoveling snow, or failing to install security measures. To summarize, remember, peril is the cause of the loss, and a hazard is the condition that makes the loss more likely. Understanding the difference is crucial here for protecting yourself and your property.